Now, you might be asking yourself, why do I even need a stablecoin if it doesn't move in price? What's the use case, right? What's the advantage of me even hanging on to stablecoin at all? You don't have to worry when you have stablecoin in your wallet or on your exchange. It's not going to go down, right? Because it's pegged to the price of the US dollar. So it's stable. That's the whole, the stable coin. You can park profits in stablecoin. That's really how it all started. Was people were trading crypto on platforms like Binance. If you were holding Bitcoin and Bitcoin went way up really fast like it used to, then you could trade your Bitcoin for Tether and just hold the Tether. And if Bitcoin took a huge drop in the next couple of days after its run up, then you had maintained your profits in the stablecoin. It can be used just like any other cryptocurrency, but it stays stable. So, and because it stays stable, merchants like it. There were some merchants that were accepting Bitcoin in the early days, and they stopped because of the volatility. Because if you're selling a product on your website and you allow someone to pay in Bitcoin and the Bitcoin comes into your account, you send out that product, and then the next day Bitcoin takes a dive, and now you've just maybe lost your profits. So merchants like stablecoins because they're stable. They can accept Tether as payment knowing that it's going to be still worth the same amount of dollars as it was last week or the week before or last month, right? So that's why stablecoins are so big now. We're seeing a lot of big companies allowing payments in stablecoin. I thought tonight might be a good time to do a little stablecoin demo, and I've got a story on stablecoins as well. So we'll dive into all that. So welcome everybody. I'm glad you're here. I did want to just briefly mention this story about stablecoins. Hit 300 billion on CoinMarketCap. Are we there yet? Stablecoin market cap reached 300 billion on CoinMarketCap on Thursday, but CoinGecko reported 291 billion and DeFiLlama showed 289 billion, displaying significant discrepancies. So yeah, it is kind of difficult to track, but we're roughly in the area, but we're talking billions here, right? If you're not familiar, a coin market cap is a website where you can go to check out all kinds of stuff about cryptocurrencies. These are sorted by market cap, Bitcoin having the highest market cap by far, right now about 2.3 trillion. Ethereum a little bit behind there at 562 billion. And then XRP at number 3 at 186 billion. And then number 4 is Tether, right? That's a stable coin. It's always pegged to the price of $1. And then we've got Solana at number 5, BNB at number 6, and then another stable coin here at number 7, US dollar coin, with a market cap of 73 billion. Yeah. So Tether coming in at 170 billion. So pretty incredible. And then besides CoinMarketCap, you've got CoinGecko, which basically does the same thing. They have some slight differences, but they're both really good places to check your coins, break down, what's going on with the coin, some detailed information here, and histories, markets, news, all that kind of stuff. And then DeFiLlama focuses more on the decentralized exchanges and gives you information about the top DeFi institutions and their trading volumes, right? So I've got some Tether in my Coinbase account. One of the nice things about a stable coin is that when you go to your cryptocurrency account and you look at it, it doesn't go, the balance doesn't go down. So like if you were holding Bitcoin or Ethereum or something like Solana or Doge or whatever, every time you go to your account to check your balance, it's the dollar value is going to fluctuate wildly. It could be a gut wrenching drop, or a run up that just makes your heart pound. But with stable coins, if all you've got are stable coins in there, you can just go there and check your balance, and it's never going to be lower than where it was before. It could go higher because you are, if you're holding US dollar coin in your Coinbase account, they'll give you 4.5 APY. So it will go up slowly but surely. And that's better than a savings account. So the first thing to know about a stable coin is that it is always pegged to the price of a US dollar. There are some stable coins for other currencies, like euros and maybe some local European currencies, but the big ones are pegged to the US dollar. The US dollar being the world reserve currency. So that's the first thing. So you're not going to buy a stable coin as an investment. You're not going to buy a bunch of Tether and hope that it doubles in value, because it won't, right? It's always pegged to the price of a dollar. But the second thing, so we know it's pegged to the price of a dollar. That's number one. Number two is that you can earn a return in a lot of places. You can stake it on some platforms. You don't have to do anything to earn a return on US dollar coin on Coinbase, because Coinbase is owned by Circle, and Circle is behind US dollar coin. There's a loose amalgamation there, but Coinbase is very dollar coin or US dollar coin friendly, right? When you make withdrawals, you'll get very low withdrawal fees. I think 0, depending on the situation. So this US Tether came into my Coinbase account. It's a funny story. Let's say we want to deposit some Tether in Coinbase and see what they say here. Okay, so yeah, you can only deposit Tether on the Ethereum network, which is interesting, because this US Tether came in on the Polygon network. Let me see if I can. Okay, yes, from Tether address. Okay. This is a great story, okay? So in April of this year, I received some Tether on the Polygon network, and from one of my vendors. And it was kind of a bonus payment, and they normally were paying me in US dollar coin on Polygon. And so even me, the crypto dad, I don't know if I had talked to you guys about this at the time. Even I make mistakes. It was 1,000, right? But I decided to send 500 of it to Coinbase because I needed some money at the time. I was going to cash out. I was in New York at the time. I remember I was in my hotel room. And I said, okay, I'm just going to send this Tether to my account. And after a few minutes, in horror, I realized that I had sent this on the Polygon network. I had sent Tether and not US dollar coin. And then I remembered that Coinbase will only allow you to deposit Tether on the Ethereum network. Now we're getting into the different networks, right? Because stablecoins live on there are multiple networks that host stablecoins, right? Sui network, Solana network, Ethereum network, and a lot of the other EVM networks like Polygon host Tether and US dollar coin. So anyway, I made this transfer to Coinbase and then realized in horror that I had sent Tether on the Polygon network and not on the Ethereum network, and not US dollar coin like I thought I was doing. And then it just disappeared. It was gone forever, as far as I knew. And I knew that I had made a mistake and that I had screwed up. And I even tried to contact their tech support. And then, of course, their bot told me, can't help you. You deposited Tether on the wrong network. Boom, it's gone. They even warn you, right? It'll be lost forever. And then a couple weeks later, maybe a month later, I saw that there was a tool that you could use to try to recover coins that you put on the wrong network. And then when I drilled into the tool, I don't remember all the details, but anyway, I got there and it was like, you can't do it. There's nothing you can do. It had to do with other types of mistakes, not this one. And then on Friday, all of a sudden, I get an alert that says, you just received 500 Tether in your Coinbase account. And I was like, what? How could that be? I don't remember transferring 500 Tether. And I thought, was it a vendor paying me directly into my Coinbase account? They don't do that. They always send it right into my wallet. So it's really, and then I looked at the details and it said, you just received 500 Tether on the Polygon network. And I was like, oh my God, that's the 500 that I sent in April. What is this? April, May, June, July, August, September, 5 months. And then it just magically appeared in my Coinbase account. So go figure, guys. So we talked about the top 3 things. For number 1, it's pegged to the price of $1. Number 2, you can earn a return on stablecoin, sometimes easier than others. And then number 3, it exists on different networks, and that's very important. Because when you make a deposit or a withdrawal, you have to make sure that you're sending it to the right network of the destination. So in my case, I just outlined that little mistake that I made. I went to deposit Tether using the wrong network, and it did not get to its destination. Now, I don't know if it was a divine intervention or what, because when we went to deposit and they're still only accepting Tether on the Ethereum network only. So what am I talking about? Well, if we hit deposit crypto here and we hit Tether, they say that's it, Ethereum network only. They just give you the address. Now, if we say US dollar coin, notice that they give us all these choices of networks that we can use to make our deposit, right? Some cheaper than others. A little secret though, if you don't really have to choose, they're basically letting you know, and they do want you to choose, and you can, but they're always going to give you the same address, right? So boom, I understand, and there's the address 5F359A. But let's say that we choose base. It's the same address, right? So as long as you're using one of the address or one of the networks that they support, you can send it. It'll always hit the account because it goes to the same address. Now, this address is unique to my Coinbase account. Every person that has a crypto exchange has personalized addresses for all the different cryptos that you can manage or deposit on the exchange. And a lot of you may not even be familiar with this because most people, I would say the vast majority of people out there that are just getting into crypto don't deposit their crypto on the exchange. They just they deposit dollars and then they buy crypto. And then they just leave it on Coinbase until they sell it, and then it goes back to dollar. But if you're into self-custody and you buy Bitcoin on Coinbase and then you put it in your wallet, like your Ledger wallet or your Trezor wallet or your Hot wallet or whatever kind of wallet you're using, and then you decide to sell it later, you have to transfer it back. So those people that have took profits from their wallet will be familiar with making a deposit on an exchange. But you can self-custody your stablecoin if you want to. Now, unfortunately, now that it's on the exchange, right? Let's say I want to send out this Tether. Let's see what they say. Withdraw crypto. Let's US Tether. Whoops. Oh, they want an address. Okay. So, yeah, let's go over here. This is my Ledger Live. This is the software that I use to manage the crypto on my Ledger device. Let's go into an Ethereum wallet. And, well, okay. So even in my own wallet, if I go to my Ledger Flex and say I want to receive or make a deposit, we'll just skip the hardware check. That's the address that it's going to give me. It ends in 2445. Right? Now, if we go to my Polygon account and we say I want to make a deposit there, notice because we're on the same device, it's the exact same address. Right? So I can take this address. Now, if I make my withdrawal from Coinbase of my Tether, okay, right here, and we paste in that address and we confirm it. It knows it's familiar with that address. I've used it before. And then I choose Tether. It's not going to give me any choice, right? It's gonna let's go ahead and do 50, and let's preview it out. And it's only going to use the Ethereum network. So even though it came in on the Polygon network, if I want to withdraw it, it's going to be, they only give me the option of withdrawing it on the Ethereum network. And they're not charging me a huge fee here. 27 cents isn't bad, considering. I've seen fees of, $3, $5, $10 on a $50 ERC20 token withdrawal, because that's basically what we're doing here. Let's go ahead and send it out, do the withdrawal. So, but then let's take a look at where it's going to end up. It's most likely, well, we know it's not going to go into my Polygon wallet because we sent it on the Ethereum network. It's going to end up in my Ethereum network or my Ethereum wallet, and it's going to show up as a token. This is another fine point in crypto management. Every chain, not every chain, but any chain that supports sub tokens like the Ethereum chain, you can send a token to the main address of the wallet. When the token comes in, the wallet will know, hey, this is an Ethereum token, and it puts it in the tokens down here. Here's Tether. Oh, yeah, it did. All right. So the Tether has already arrived. You can see here we've got that incoming transaction, and it's safe and sound in my wallet. So now I can self-custody this US Tether. And barring fees, it's kind of it's a better way to hold it. In the past, holding Tether on the Ethereum network could get a little expensive due to Ethereum fees. Because Ethereum gas fees can be high at times of high activity. But since Ethereum switched from proof of work to proof of stake, the fee structure has decreased quite a bit. Now, I mentioned that there are other networks that we can manage our stablecoins on. So I want to show you a transfer of a stablecoin on a different network and how we deal with that. So don't, if you're on Coinbase, you don't want to send anything on the wrong network, or you may never see it again. I got lucky. I want to do a quick transfer to Kraken from a different wallet. So what we want to do is we want to make a deposit to our Kraken. Now, look at Kraken. Kraken supports more networks on Tether. So let's go down to Tether. Now, for a Tether deposit, remember, Coinbase only supported Ethereum network. Kraken supports multiple networks on US Tether. A little more flexible over on Kraken. Now, this particular wallet is holding Tether in Tron format. Coinbase, I would wonder when the day comes when Coinbase supports the Tron network. That'll be the day that it rains chickens or whatever. Coinbase won't touch Tron. I don't think you can buy and sell Tron on Coinbase. Pretty sure. Anyhow, but I have some stablecoin here in this Tangem wallet on I have some Tether stablecoin on the Tron network. So I can't deposit that in my Coinbase account, but I can in my Kraken. So I choose Tron network. They give me some instructions here, and there's the address, right? So what we're going to do is we're going to take our Tangem wallet. We're going to go to the Tether, and we're going to say, okay, I want to send Tether to this address, right? So in the Tangem wallet, in the top right corner there, I've got that QR code reader. I'll just scan that Tron address, right? We'll hit next, and then let's send $300 worth of Tether on the Tron network. Now, the Tron network is very cheap, but unfortunately, when you're using the Tangem wallet, for some reason, they charge me a lot of Tron. I don't know what this market network is, but they charge me a lot of Tron. I think if it were a native Tron wallet, like Tron Scan or something like that, I wouldn't get these huge fees when I do transfers. But for some bizarre reason, I spend a lot moving my Tron to Kraken out of Tangem. And I think that's a Tangem thing. All right, so we hit send, right? And then we get our Tangem card here, and we bring it to the back of the phone to authorize the transaction. And it's on its way, right? We'll hit close, and we can refresh, and we just sent out 300 Tether on the Tron network over to my Kraken account. Oh, that was pretty cool. Now, this takes a few minutes. It's going to take 3 or 4 minutes to get to my Kraken account. And then once it does, we'll deal with it. So stablecoin is always pegged to $1. Stablecoin can give you a return on certain DeFi platforms and on certain centralized exchanges. Let's hang out for a minute, and I'll get caught up. And then once the Tether gets in my Kraken account, then we can do something with it. Now, you might be asking yourself, why do I even need a stablecoin if it doesn't move in price? What's the use case, right? What's the advantage of me even hanging on to stablecoin at all? Well, I kind of implied, or I hinted at the very beginning, that you don't have to worry when you have stablecoin in your wallet or on your exchange. It's not going to go down, right? Because it's pegged to the price of the US dollar. It might go up if you're, getting a return on it, staking it in some platform or something like that. But it's not going to go down. So it's stable. That's the whole, the stable coin. So I think Dan was mentioning in the chat there that you can park profits in stablecoin. That's really how it all started. Was people were trading crypto on platforms like Binance. I don't think Coinbase didn't support Tether for a long time in the early days. But if you were holding Bitcoin and Bitcoin went way up really fast like it used to, then you could trade your Bitcoin for Tether and just hold the Tether. And if Bitcoin took a huge drop in the next couple of days after its run up, then you had maintained your profits in the stablecoin. You could even dip buy back into Bitcoin if you're savvy. But trying to catch the tops and bottoms of, volatile cryptocurrency should be left to professionals, right? It's not something for the faint of heart. Now, you might think of it in terms of maybe a little more long-term than day trading. I know Dan used to do some day trading, but you could kind of count on Bitcoin doing a pullback when it hit all-time highs. As we saw when Bitcoin hit its all-time high a month or so ago, it broke to 123,000. It has pulled back. So if you had sold your Tether if you had sold your Bitcoin for Tether or US dollar back then you could buy it back up now at a lower price and, get that arbitrage. I guess that's one of it. That's usually between different exchanges, the arbitrage. But Bitcoin could have kept going up, and then you would have put yourself on the sideline. So, but that's really the basic use case of stablecoins originally, was to just park your profits. Now, what about now? Why are stablecoins such big business now? Well, because it is a blockchain-based asset that you can use to make purchases. There are places where you can use your stablecoin to make purchases. So there are now quite a few companies that you can use stablecoin to make your purchases, like Travala, right? Which is a travel agency. You can buy gift cards with stablecoins. So it can be used just like any other cryptocurrency, but it stays stable. So, and because it stays stable, merchants like it. There were some merchants that were accepting Bitcoin in the early days, and they stopped because of the volatility. Because if you're selling a product on your website and you allow someone to pay in Bitcoin, and the Bitcoin comes into your account, you send out that product, and then the next day Bitcoin takes a dive, and now you've just maybe lost your profits. So merchants like stablecoins because they're stable. They can accept Tether as payment, knowing that it's going to be still worth the same amount of dollars as it was last week or the week before or last month, right? So that's why stablecoins are so big now. We're seeing a lot of big companies allowing payments in stablecoin. And the cool thing about that is I can pay in stablecoin directly from my wallet if I want to. So I can go to a website like Travala and say, hey, I want to book a flight. And they say, okay, send us your Tether. They'll give you the choice, dollars, Tether, Visa, MasterCard, whatever. And then they'll have a Tether or a stablecoin option. And I can pay them in stablecoin directly from my wallet, right? And of course, in that situation, I'm going to give them my personal information because I'm going to book a flight or whatever. But there might be a situation where you don't have to give up all your personal information to make a purchase in stablecoin. Whatever it happens to be, it could be a VPN service or something like that that's digital. And I don't have to give out my whole life history just to make a purchase. Now, of course, if I'm purchasing a food processor, I'm going to have to give them the shipping address so I can get my food processor or whatever. Or maybe I could have them send it to a PO box and maintain, a little bit of privacy because I don't have to give out my home address. So now you can see the great advantage of stablecoin. There's a lot of companies out there that are building stablecoin infrastructure to make stablecoin payments on the blockchain faster and cheaper. I mentioned that Ethereum was, pretty expensive back in the day. So Tether on the Ethereum network had high fees, but it had all the advantages of being a cryptocurrency. Let's take a look at my Kraken account, and see what we've got here. All right, so now we've got the Tether on my in my Kraken account. Now, the interesting thing is, if I go in here and I say I want to make a withdrawal, they're going to give me the choice of a lot of networks. Now, keep in mind that over on Coinbase, the other stablecoin, the other big one, US dollar coin, is much more flexible. You have lots of networks and you can make deposits and withdrawals. But Tether is kind of restricted on Coinbase. But on Kraken, you can make a deposit from various networks and make withdrawals on any of these networks. And so basically now I've just done a cross-chain transfer in a sense, because once my Tether gets on Kraken, it's like Joker's Wild. Right now it's just Tether, and I can withdraw it onto any network that I want. So perhaps there's some place I want to use, I want to spend Tether, and they only accept it on the Polygon network. Well, now I can withdraw my Tether back to my wallet on the Polygon network, and then use that Tether on the Polygon network to make a purchase. Right? It's probably not the best idea to use your exchange to make payments. You can. But a lot of platforms out there will warn you against using exchange addresses for deposits. But if you withdraw Tether from your Kraken account and send it as a payment, they'll get it, and the transaction will go through. But you've sacrificed a little bit of your privacy coming from your Kraken account, right? And if things don't go right, they'll blame Kraken and Kraken will blame them, and you'll just be kind of in the middle. But if you use your own wallet, then, it's a crypto to crypto transfer. And if there's any problems, I take full responsibility for anything that goes wrong with my stablecoin, right? We can buy stuff with our Tether, right? So let's say we want to buy some of that DEEP token. I don't know why it's got a Bitcoin icon. Okay, there, the icon went. Let's say I want to buy $50 worth of that DEEP token. I can do that. Now I'm using Kraken Plus. So the trade is free. The trading fee is free. But the spread, whatever you want to call it, that might hit me. So I might not end up with $50 in DEEP. Right? I might lose a little bit because of the spread. Well, let's see what happened. If we go back here to the portfolio, we only have 48.8. Even though my trading fee was free, I lost a little on the spread, but not a lot, but a little more than $1. It's not too bad. So you can use your stablecoin to buy crypto. And because you're better off holding your crypto in your own wallet, you can park your stablecoin in your own wallet in case you lose access to your Coinbase account, whether Coinbase is down or whether somebody tries to hack your Coinbase and they freeze the account, or you do something that they think is suspicious and freeze your account. You want to be able to have the freedom to use whatever exchange you need when you need it. So holding the stablecoin in your own wallet is best practice. So I could use the stablecoin, send it to a vendor, or I can send some stablecoin to a friend or a family member. Hey, here's $50 stablecoin. You can use it to buy stuff. Or I can use the stablecoin to make a purchase of crypto. And if Coinbase is down, I'll go to Kraken. If Kraken is down, I'll go to Uphold, right? You hold the power when you self-custody your crypto. So best practice is to self-custody stablecoin in your own wallet for when you need it. And fees are cheap. I didn't even go over all the other networks out there. You saw I had to pay a big fee for Tron on my Tangem wallet. But other networks like Polygon, Arbitrum, Binance Smart Chain have really low fees and are really fast. So if you're savvy, and SUI as well.